This is gonna be another milestone. I'm eyeballing it. I'm giving it some room, just not every trend line. I wanna walk you guys through the placement of the trend line. The biggest mistakes that I made on this trade right here. Okay guys, you have made it back to another Tori Trades YouTube video. What's she gonna talk about this time? Is it gonna be another record? Is it gonna be another personal best? Is it gonna be another milestone? No, today is gonna be nitty gritty. We're getting into all of it. I made $137,000 this year, and today I'm gonna break down my very first trade of the year. What is my criteria? What is my playbook when I'm looking to enter a trade? You guys know that I trade trend lines. If you don't, hi, I'm Tori. I'm a trendline trader, and I want to educate you guys on how, yes, my strategy is simple. It's not easy, and there is a criteria that I look for before I enter. It's just not every trend line. It's not every opportunity. It's not every entry. There are things that I look for and checklists that I go by before I enter my trade. Before we get started, I do want to show you guys my brokerage statement from TradeStation. It is my futures account. It's a regulated broker in the US, just to show you guys that I am verified, I am legitimate, I got my credentials, I got something to back it up, and then we will actually get into the trades itself. All right, we're logging into TradeStation right now. I'm going into the Client Center, and I want to show you guys my statements. Okay, we will start with January. Okay, so this is my statement for the month of January. You guys can see this is a verified TradeStation statement. You can see this is my account number, this is my futures account, and you can see the beginning balance, the month activity, and the ending balance. So my net profit and loss was $10,658 in January. And this is that exact trade. Shout out to TradeZella, first of all. This is a place where you can truly dissect your trade. See, what did you do right? What did you do wrong? Did you go through your checklist? What's your playbook for the entry here? This is a great place for me to also showcase my strategy, my stats. You guys can see my R multiples. I'm gonna be honest with you guys. I've never implemented R multiples. TradeZella is the only reason I'm even using it. I mean, it's cool to see what it is. I don't use it. I don't implement it because if you guys know my strategy, you know that when I am entering a trade, I don't know what my reward is going to be. I know what my initial risk is going to be. The risk also trails as price progresses, and I don't know when I'm exiting that trade until the trend is broken. So with that being said, there's still a ton of cool features that you can see here in TradeZella. I can show you guys how many contracts I traded, how many points, how many ticks, the commissions that I paid, the net ROI. You guys can see how much I was up, how much I was down in the trade. And then I even give my trades star ratings. So this one I actually only gave 2.5 stars. And then I'm going to walk you guys through all of the notes that I made on this trade and why I only gave it 2.5 stars. You can see the amount that I risked. It was $15,000 for this trade. You can see the realized R multiple, which is 0.69. And then I'm also able to tag setups here. So I can tag if this was a high risk or a low risk. Was this a trend line break? Was the exit a area of support and resistance? What mistakes did I make? So there's a lot of cool features that this has that I'm going to walk you guys through today. And also it has the ability to kind of do a replay to show you guys the trade that I was in. And I'm able to kind of replicate where my lines were for my trade here. And then the last thing I'm going to show you guys is the running profit and loss. So you can see upon entry how much I was up or down until the exit of the trade. So there was a good chunk of time where I was down. I was in drawdown for most of this trade and then finally was up and closed it. So you guys can see the running profit and loss, and then these are all the notes I made. So we're gonna go through all these. Here we go. We got a 3 touch point trend line here, which is great. Ideally what I look for, I'm looking for multiple touch points of the trend line. Okay, so let me show you guys how I made $10,688 based on this 3 touch point trend line breakout trade. Let's get into it. I wanna walk you guys through the placement of the trend line. We've got point A, point B, point C, 3 touch points. We've got a break of a trend line here. You can see my entry was over here at this 9/13/99, and it was also hours later, if not a day later. So I want to show you guys why I marked this trade mistake as FOMO. Fear of missing out. So the first thing is I can see the entry of this trade was late. My entry should have been at the break of this trend line here, around this 920-ish, anywhere between 912 to 920. I didn't enter until back here. So I missed the setup and then still entered based on FOMO. Okay, I want to walk you guys through the notes that I had for the very first trade of the year. First trade of the year, FOMO driven. Let's go through why I labeled this as the first trade of the year. This trade was a classic case of letting FOMO dictate my actions. Despite knowing the setup was high risk and far from my ideal criteria, I went ahead with it. Okay, so let me walk you guys through that. If we look at platinum at the beginning of the year, this is January, this was an insane move. Look at this incredible downward move here. I missed it. I didn't capitalize on any of this position. That was the first setback of this trade here, was that I was experiencing FOMO because I had missed out on a beautiful move prior to the one that I had entered on. So that was already weighing on me. The next thing that was weighing on me is I hadn't placed a trade yet for the year. When I entered my trade, it was on January 23rd, the very end of the month. 23 days of 2024, and I hadn't placed a trade yet. I was getting antsy. I wanted to get into a trade. I felt like I had to trade. Okay, so here are the setup details for this trade. It was a trendline break. That's my style of trading. I am looking for these trend lines to be broken. I entered on a trendline break, but it only had 2 touch points. That was not enough information to provide a strong confirmation for me. That already in itself, you can tell, was a trade based on FOMO. It didn't really meet all of my requirements, all of my credentials to enter the trade. It didn't give me as much confirmation or confidence. I simply entered with 2 touch points on a trend line. The next thing is position size. I did adjust my position size to half the amount because this was a high risk trade. Okay, and then the last thing is profit. I did at least exit the trade with profit. It wasn't based on the strategy, and I did let my emotions guide the exit for this trade. So these are the details of the trade itself. I did give it 2.5 stars. 1, I gave it 2 stars just because it was profit. Profit is profit. I love it. I gave myself half a star because I at least reduced my position size even though it wasn't an ideal setup. So now let's walk through the trade itself. We're looking at platinum. PLJ24 is the ticker symbol, and we're looking at a 4-hour time frame. We've got a beautiful downward trend line here. 1, 2, 3 touch points. We got a break. That should have been the entry. Guess what? I missed it. I did not take that entry. So I ended up taking a mediocre setup. And let me show you guys where I entered and what trend lines I had on the screen that got me into my trade. It was not this beautiful trend line here. That was the setup I should have taken. Instead, I took this one. We've got a touch point here and a touch point here. So I entered my trade based on a 2 touch point trend line. 1 touch point based on this last high, and the second touch point here based on this last pullback at around 923.30. Then boom, we entered here on the break. Now, when I get into my trade, I always want to have a trend line in either direction, an upward trend line, a downward trend line, a bullish, a bearish trend line. Now, when I enter the trade, it is because a trend line has been broken. This downward trend line was broken. Now, the opposing trend line is the one that keeps me safe. That is the one that my risk goes on the other side of. The stop loss goes on the other side of. It trails along this opposing trend line. So when I got into my trade, look how far away the price was from the opposing trend line. Significantly far. $15,000 far, to be exact. I had to give this trade a risk of $15,000 just to see if this was going to play out, just to see if this trade was going to work. And now let's go through just the running profit and loss. When I entered the trade, I'm immediately down $2,500. Then I'm up $200. Then I'm back down to almost down $4,000. Then I'm down 2, then I'm down 2. Okay, I'm finally up. We're at $1,600. We're up only $500. Now we're down $2,000 again. And then right here, the most amount that I was down on this trade was $9,500. And then we finally started to get some relief. Price started pulling away, back up. Now we're in profit, and boom, we closed for $10,700. Hi guys, let's take a quick break to talk about online security. We might take risks in trading, but we should never risk our personal information. And that is why we need a VPN. A VPN is a virtual private network, and it protects your online activity. That means once your device connects to the internet, all information is encrypted. That way your online activity is hidden from all scammers and trackers out there. Dude, we got scammers all over the trading space. Surfshark offers 3,200 different servers in 100 locations, which makes it easy to use from anywhere. Plus, they have 24/7 customer support. You can access your bank, send and receive files, and browse freely, all while sleeping soundly at night knowing that your information is protected. Unlike the risks that we take with our trades, there is no risk in trying because they offer a 30-day money-back guarantee. To make things even better, right now, if you use my code TORITRADES, you can get 4 extra months of protection with Surfshark for free. So just go to surfshark.com/TORITRADES or use my code TORITRADES at checkout. All right, browse safe, my friends. The biggest mistakes that I made on this trade right here, first and foremost, is FOMO. The second one was, this was a high-risk trade. I'll show you what I should have done, but what I did instead. Taking this trade here, this is where my risk should have gone. It should have gone along this trend line right here. Point A, point B, we ended up getting a third touch point. Beautiful. Now let's go through how much I would have actually risked on this trade, taking the break and then putting my stop loss or my risk on the other side of my safety line. Okay, so this is where my risk should have gone. It should have gone on the other side of this trend line, this upward trend line, somewhere around this 897. We'll say 897.02. So if I type in 897.02, my risk would have been only $8,000. Not bad for a $112,000 account. When I am teaching people how to trade, especially beginners, I always will recommend trading between like 2 to 5% of risk. So the amount that you're risking per trade needs to be around that 2 to 5% of your capital. This was a little bit more, but okay, absolutely within my parameters. I've been trading for 9 years now, so a 7% risk is not bad. But I went in a lot heavier than that. So this is what should have happened on my trade. I should have entered a lot sooner, but I didn't. So I took the next break based on FOMO. Missed this beautiful downward move. I'm looking for anything. I'm thinking, okay, we made an incredible move down. Maybe we're going to completely retrace. So I took the break of this next trend line, only 2 touch points, and this is where my risk should have gone, on the other side of this steeper upward trend line. I would have been in profit and profit and profit. Boom. I would have had to close my trade around this 906 area. This would have been a loss, but minimal. What's cool is if price was to continue up, moving along this trend line, my risk would have gone in profit. So if price continues up, my risk is trailing along the upward trend line. This would have been a scenario where I would have taken a smaller loss, but it would have trailed along it. So it would have been smaller than the initial risk. So let's even go through how the loss that I should have actually taken here. So we're going to say 906.70. 906.70. Okay, I would have taken a $3,000 loss, $3,600 loss. Dude, not bad. Sure, take it. Take my money. Pay my way out of trouble. This is what I should have done. Instead, price crossed this line. I'm not ready to close it. It was a mistake I'd made, and I was willing to give it to this original upward line here, this higher time frame. This upward line here was drawn from much farther back. We're using a lot more data here. I was willing to let this trend line tell me to stay in my trade, which was much higher risk, which was that $15,000. I should have just allowed it to go $3,600 loss. Instead, I said, you know what? Price is breaking through. I'm not going to take this loss, so I deleted it. I'm going to let this original trend line hold true. And lo and behold, I ended up being in profit after it retested the trend line that it broke. So it broke this trend line, tapped it from the other side, and then continued up. So when I trailed my risk, I used this last low, boom, boom, and now at least got rid of some of that risk. But when I'm showing you guys my trade risk and my R multiples, it's going to be based on the initial risk. If price was to immediately turn against me as soon as I got in, that's what my initial risk is. But just keep in mind that it always will trail. That number will always change as price is progressing, as price is moving along these trend lines. But this is what I should have done right here, but I'm going to show you guys what I did do. So I entered at $913.99. If price would have gone below this 884.23, 884.23, I would have taken my loss. Now this says 14,000. Maybe I would have put the price down a little bit lower. Let's say 882.85. Another thing to keep in mind, when I am putting my stop loss on, it's never to the cent to the T. I am simply just taking that stop loss and putting it somewhere on the other side of the opposing trend line. And I have alerts on all my trend lines, so for the most part, I get the alert before I actually get stopped out of my trade. I want to see what's happening before my trade gets closed, or before I have to take my loss. So I will always put it somewhere on the other side of the opposing trend line. As price continued up, moved against me, I'm down $9,000. It hit this downward trend line from the other side, that's called a retest, and then continued up. I was sweating at this point. I will be honest, it was getting close to breaking this original upward trend line, and I was thinking, all right, we're gonna have to solidify this high risk $15,000 loss, very first one of the year. It's almost like a self-fulfilling prophecy where I was so nervous to trade in January because I didn't want to have a bad January that I was going to have a bad January. Anyways, price ended up retracing. It bounced off the other side of my downward trend line, did a little retest here, and then continued up. Now I can continue to track price even steeper. So let's continue to track price steeper up. Boom. I'd say about right here. Another thing to keep in mind, guys, my trend lines are not also to the T, spot on. There is a magnet tool where you can have your trend line snap to the lowest part of the bar, I am simply I'm eyeballing it. I'm giving it some room. I make my trend lines very thick because I don't want them to be so precise. Okay, now as price continued to move steeper and steeper up, I ended up closing my trade at 935.40. I did not close according to the strategy. If you guys know my strategy, you know that I am either entering or exiting based on breaks of trend lines. Now, there are occasions where I will exit a trade based on a horizontal level, or a support and resistance, or a supply and demand level, whatever you guys want to call it, or a level, if you will. But you'll see it's a horizontal yellow line, and that is where I will mark up the price that is likely to get hit multiple times and then turn around. So there's going to be 2 occasions where I will exit a trade. It's because of a break of a trend line or because price has hit a horizontal level here, or a key level. We got an entry here at 913.99, exit at 935.40. The exit of this trade, let's go back to the notes. I exited this trade with profit, but not based on my strategy. I let emotions guide my exit rather than following my predefined rules. I did not exit because of either of those criteria that I just mentioned. I did not exit because there was a break of a trend line, and I did not exit because there was no key level here. I closed because I was simply up $10,000. I was up 10 grand, and the drawdown that I was in, and then finally being back in profit, it was a lot of emotions, a lot going on for January. So I closed simply because I was up $10,000. Where I should have closed this trade was when price broke my upward trend line. So I closed at 935.40. I should have closed around 931. So I happened to get, $4 richer by simply closing based on emotion. But if I had to dissect this trade based on the strategy, a proper entry and a proper exit, the exit would have been around this 930, 931-ish area when price broke the trend line. That is the nitty-gritty of the entire trade here. It looks a little messy. It wasn't a beautiful move. This is what I wanted. This is what I missed. And this is what I thought I was going to get. I thought I was going to get a move like this to the opposite side. I thought we were going to completely retrace. I was so ready for a move like this that I allowed myself to take a higher risk trade and give up almost $15,000 just because I wanted a move like this so bad. And guess what? We didn't get it. We didn't get one. So now let's go through the last bit of the notes for this trade. What are my key takeaways on this first trade of the year? First one, avoid FOMO at all costs. The temptation to jump into the first trade of the year should not override the importance of a solid setup. Just because I missed the prior move, just because I hadn't placed a trade in most of January, it should not have got me into my trade that was mediocre. The next thing is stick to the strategy. Exiting based on emotions rather than strategy shows the lack of confidence in the trade. When you are simply closing just because you are up X amount, shows that you are not trading according to the strategy and shows a lack of confidence in your strategy. Risk management. Lowering my position size was the right call, so I only traded 10 contracts of platinum when I normally trade 20, but the setup itself was still mediocre. So good job for cutting your risk in half and reducing your position size, but it was still not a great trade. And then the last thing is trendline criteria. Ensure that the trendline breaks have solid touch points before considering them as a valid setup. Those are the key takeaways that I have for this trade. It wasn't A+. I gave myself 2.5 stars on this trade. I made $10,000. It was an okay entry and a not great exit, but this was my first $10,000 trade of the year. Okay, so even though I closed this trade in profit, it still wasn't one of my best trades. There were still quite a few mistakes that I'd made, and going through and journaling them is going to be the most beneficial. You get to go back and see, what did I do right? What did I do wrong? Where can I improve, and how can I trade better next time? Okay, so we'll go through the next trades in the next video. Thank you so much for watching. Don't forget to follow me for more trendline trading tips, and I will see you guys in the next video.